Hi, Jason. Thank you very much for joining us today. As a futures trader, your approach to trading or investing is very different from many of the people we speak with. Typically, we interview portfolio managers or sell-side analysts who use fundamental analysis, but you don't do that. So I want to start right here. Maybe you can just tell us about your approach to investing or trading.
So I trade the futures markets. I kind of take the approach of that on a very general sense. We see the statistics that a very large percentage of traders will lose money over time, 95, 97%. So I take the general approach of, well, if 97% are going to lose money, then if I could figure out what they're all doing, then I can take the opposite of what they're doing and I can capture in gains what they get in losses. That's a very general idea of what I'm trying to do. So I have data that measures where people are heavily positioned, and I'm looking to pick market turns when people are massively positioned short. I'm looking to go long when people are massively positioned long. I'm looking to go short. That's the general idea of it. And on a more sort of financial theory basis, I'm taking the view that the market is a discounting mechanism. People have come to the conclusion that price is the discounting mechanism in the market. I take the approach that positioning is actually the discounting mechanism in the market. So it's not like, hey, all the good news is priced in because the price of this asset has gone up. I look at it more like all the good news is priced in because everybody is already long. And so that's kind of how I approach it.
And just to clarify, when you say you look at traders, you're talking about futures traders. It's not like you're looking at day traders or Robinhood traders.
No.
And to clarify, you don't care about how many iPhones Apple sold or what's happening in the Middle East or what the non-farm payroll numbers are. You're strictly looking at these trading numbers.
I care about those things when it comes time to actually put on a trade. So I don't trade Apple, but because I don't trade stocks, but let's use Apple. So if I had a measure that said, well, the masses are way too long Apple here. And then Apple came out with news that iPhone sales were twice as good as were being forecasted. Then clearly Apple stock should go up, right? And if it didn't go up on that news, that's when I would be looking to short it. Because everybody's already long, because all the good news is discounted in based on positioning, and now we get like a market confirmation where here's something that should make the thing go up, and it failed, so I will short it on that. And that's kind of more, the positioning gives me a setup for what I'm looking to do, and then this kind of news failure price action gives me the trade. Okay, so it's set up. Here's the confirmation for the trade, and that's when I put it on.
So would you call yourself a contrarian trader?
Yes.
And I'm curious.
Contrarian positioning, not contrarian price. I'm not selling something just because it's gone up a lot. That's how you get run over as a contrarian, right? I'm selling it because people are way too long.
Yeah, that's happened to me a few times. And I'm curious to hear what the evolution was of this process.
Just years. Years of doing various things and keeping good records of what I did and going back and seeing what kind of stuff worked and what kind of stuff didn't work, and slowly trying to eliminate the stuff that wasn't working over time and focus on just the stuff that was working over time, and just kind of became this.
And when you say you keep track, do you journal every day?
I used to journal all my trades, and now I don't. I run one process now, so all my trades look exactly the same. So journaling them is a little bit silly, but I do a weekly for myself on the weekends where, okay, here's the trades that are set up to trade. These are the circumstances under which I will trade them. And this is the trades that I made over the past week for this reason. So in a way, it's a journal, but it's like a weekly journal.
And you mentioned that you only trade futures. How many different types of futures do you trade? And what would be the main ones?
So I trade all the US listed futures contracts that have liquidity. So I think there's 37 of them. It's all the stock indices, the fixed income, the currencies. Sorry, I'm just looking. The metals, the energies, the grains, the softs.
And you mentioned that you consider yourself to be a contrarian trader. So that means you're picking tops and bottoms. How do you identify when let's just say a stock index has bottomed or topped? How did you know when to put the trade on?
Well, like I say, first thing is the positioning. So you see a massive amount of, let's say, short positioning. I'm looking to get long. Now I'm looking for a confirmation. So you look at, for example, the bottom in the stock market last October was on a CPI day. That was the main thing that was driving stocks at that point, and arguably maybe still is, but certainly was then. You had the CPI come in October much higher than expected, which had been very bearish up until that point. It was everybody's biggest fear. And the market went down that day and closed up on the day. So that's the market confirming to me that it's already over discounted in because everybody's already too short. So that's what the turn looks like to me. It's a combination of positioning and then market confirmation based on this news failure type of thing.
And how much are you looking to make from trading in any given year? Do you have an average number that you're trying to approach or achieve?
Yeah, so I manage money for institutions. I am looking to put up between 12 and 15% a year without drawing down 5%. That's sort of my goal, and that's done in a very negatively correlated way to most other return streams, and that's really what my business is based on. People are giving me money because I can provide them hopefully with positive return expectations with negative correlation to other things that are in their portfolio, and that's how they, increase their overall risk-adjusted returns.
And how long do you keep your trades on for? Would it be, do you ever do trades that might last one day or 1 week or a month, or is it longer?
The typical one is about 2 to 3 months on the winning side. The typical losing trade is about a week. I just get stopped out. If I'm picking a low, a turn, and the market makes a new low, well, then I didn't pick the low. So I get stopped out. It's all based on what the process is, right? The process is picking a turn and the market makes a new low, then it's not a turn. So I get stopped out. The winning ones tend to be 2 to 3 months, although I've had ones last longer, and I've had a couple that have lasted just a few weeks, but it's not really up to me. It's more up to the positioning. So if I'm buying because everybody is super short, well, once they're not super short anymore, I get out. I'm essentially front running in a way stops, right? So if I buy something and it starts going up and all these people that are short start getting stopped out, right? That pushes it higher. And once they are kind of stopped out based on my measurements of positioning, I take my profit. And that's where the edge was to begin with. So now the edge is over, so I'm out.
So you mentioned stop losses. Where do you place those?
On the new, for the most part, on the new low. If I get one of these news failures days, so the bad news comes out, the thing gaps down, reverses, closes up, my stop will be on that new low.
Right, but on a percentage basis, is that 5% down, 10%?
So that depends on how the market does that day, but on a positioning now, my position sizing will be, I know my entry, right? I know where my stop is. So I will size that for me so that I lose 75 basis points on my portfolio if I get stopped, and that number is just picked to get me to the volatility target of what I'm looking for, 12, 15% return type of thing.
Right, so I'm surprised, says 75 basis points, that's pretty tight. So that's not, you're not taking, your losses are quite small then.
We got to live long enough to get lucky, as I like to say, So that's what makes sure that I live long enough to get lucky. I do have people argue with me that if I'm putting up even 12% return on a 5% drawdown, that I should lever that up and, do 30% return or whatever on a 15% drawdown. But that's just where I'm comfortable doing, and the clients have the option if they want to lever it up, they can lever it up, right? But I look at it as I'm trying to put up 12 to 15% on a 5% drawdown.
So let's put all these elements together and just provide an example of how you might go about putting a trade on. And I want to use 2023 as a review. In Q1 of this year, I'm sure you remember the market and the sentiment was quite negative and everybody thought we were going to go into a deep recession. And at that time, we also had a crisis within the regional banking system, and people thought that would spread, but it was pretty well contained by the regulators. But at that time, how did you position yourself? Did you get long the S&P and the NASDAQ?
Yes. So I talked about the October low. I didn't get long at the October low because the positioning was not there for me. But in January, the NASDAQ positioning in particular was showing people massively short. And we had one of these news failures events somewhere in January there, and I got long NASDAQ and rode that for a few months, and then that switched. People got out of their NASDAQ shorts, but they had gotten very short the S&P at that point. This was going into sort of April. So I got out of my NASDAQ and I got long S&P and was able to ride that up until about June, when they started getting out of those shorts and went kind of neutral in positioning. And so I was out of that. And then obviously there were other trades along the way too, but just as a stock market example, that was what I was doing earlier in the year. Yes.
And what was happening in June? Why did you take your longs off? Because the market's moved quite a bit since then.
Yeah, I mean, that's where the positioning just got me out. They were super short. They got out of the super short. They went more neutral positioning, and that's when I get out. It's all a process. So once they are neutral on positioning, I get out. And that
here we
doesn't mean that the market can't keep going up. You know what I mean? But I take my piece, I do my job, and that's what I do.
And here we are. The S&P is not too far away from all-time highs. The NASDAQ, same thing. How are you positioned now when you look at the S&P and the NASDAQ? Are you getting short because of this move?
No, I'm not. There's nothing to indicate to me that people are positioned super long here. They're clearly starting to buy, but because they've really been positioned pretty short all year. And yeah, in June, they got out of those shorts, but then obviously from July through October, they started getting bearish again. And we've had this rip, and this rip, that because it's happened so quickly, hasn't really given them the chance to get out of shorts quickly enough. So there's nothing for me here to be shorting stocks, no.
So your indicators are telling you there's still a lot of people short this market?
Neutral to short is what I would call it, neutral to short. Not long enough that I would be looking to get short, but yes, they're leaning short, neutral to short. They're certainly not super long here.
Wow. So going into year end, we're not too far away from year end, but do you anticipate that this market will keep lifting?
If I had to guess, I would say yes. But like I say, that has nothing to do with what I do. You know what I mean? I'm not long because I think it might go up, or I don't play, that's not the game that I play, right? I play a very disciplined process game. So, like I have not been long during this rip up recently, but my process was able to get me long some other things that are correlated to the stock market. So I was able to get long, like Swiss franc, Canadian dollar, which arguably the dollar, dollar down, stocks up has been the correlation. So as the stocks went up, those trades worked for me. Doesn't matter to me where I make money, as long as I make money, right? I talk a lot about 08. I had a profitable year in 08. I wasn't short the stock market during that crash. And I wasn't long the bond market, which ripped during that. Those were sort of the two big trades that people look at. I had neither one of those on, but it doesn't matter. When I look at my return stream, I made money. So who cares where it was, you know?
And so you just mentioned that you're long the Canadian dollar, you're also long the Swiss franc. That would imply you're basically short the US dollar. And there's a lot of relationships between the various markets. The bond markets has had a nice move here. The 10-year yield has gone from 5% down to 4.20 or 4.30. What about bonds? Are you playing those at all?
No.
And
I'm looking at some point to get short bonds here. They're starting to get to a point where I might have to get short them, but I don't know when that will be. It could be this week, or it could be in 3 months, or, you know, it's all up to what the market tells me. So, but I'm not long bonds. I have no interest in being long bonds whatsoever.
And what about gold? With this move in the US dollar, we've had a nice move in the price of gold. What's your sense there?
So I'm starting to get signals where I need to possibly get short gold. I haven't done it yet, but it's starting. Looks to me like it's getting very close, which would be nice for me, in particular if I don't get an exit in the Swiss or the Canada, but I could get short gold. It will give me a nice hedged portfolio.
And the other commodity I have to ask you about is oil. It's been very volatile this year. It was at
Yeah.
$95 not too many months ago, and now it's around 75.
Yes.
What are your indicators saying about oil?
It's all neutral, all very neutral to me. So, you know, what I find is when my indicators are neutral, the market's just kind of, it's not like they're not going to move. You know, they're either going to go up or they're going to go down, right? But I'm not involved when my indicators are neutral. But what tends to happen is it just kind of swings around because there's not really big positioning on either side to push it one way or the other, right? So they have been in the last month or so starting to get somewhat aggressive on their selling of crude oil. They were pretty long crude oil, you know, obviously a month or so ago, and now they're starting to get pretty aggressive in getting out of those longs. So we'll see how it plays out. If it can keep going down, then maybe they'll actually start getting short, and maybe I can start having a look at getting long.
So when we look back over 2023, it was an incredible year for many reasons, but is there one or two things that really stand out to you about 2023 in the financial markets? Anything that really surprised you? And I guess I'm talking more about the moves.
I don't think anything surprises me anymore because it all is so surprising all the time. But I think that the year was all about the fact of what you said earlier. You know, everybody came into this year super bearish, right? Super short, super bearish. This recession was going to happen. That was a guarantee, and the market was going to go down because of it. That was a guarantee, right? And that really, to me, defined the entire thing. You know, when you talk about positioning, it's not just in the markets that this is true. It's in the real world too, in my view. If everybody believes that there is a recession coming, if you run a business and you believe that there is a recession coming, then you're clearly going to hold back on your investments and growth, right? So if everybody's holding back, then the recession doesn't come. Well, now they've got to rebuild inventories that they didn't build because they thought the recession was coming, right? And that's kind of what you've seen here, why GDP kind of took off in the last few months and all that, because it was like, okay, we thought recession was coming, it didn't come, so now we got to rebuild, right? So now you're getting growth, right? And I think that was really the big story of the year.
So we discussed your process. You gave us your thoughts on the market and various markets. Now I want to move on and get some advice from you on trading. And I just want to start with, what are the characteristics or attributes that makes a great trader? What's the most important element?
Ego. You have to take your ego out of it, right? This game is not about being right or wrong about the markets, right? Counting on being right or wrong about the markets over time is going to be, I believe, a losing game, right? You're trying to predict the future. which nobody has ever successfully done. You can't predict the future, right? But people think that's what it's about. Oh, I think the S&P is going up, so I'm going to get long. Okay, but what if you're wrong? You know, like you got to take your ego out of it, right? I think that's the single most important thing to do. It's all here. Trading is all here, right? This whole thing of predicting the markets is garbage, right? It's all mental. And it's all about behavioral biases, and it's all about fighting your behavioral biases and getting past them and just making money, right? I like to say a lot, I love to be wrong as long as I make money when I do it, you know. And I'm wrong on my predictions all the time, but I don't really care as long as my process works. That's why you develop process, right? To take your predictions and your behavioral biases out of it, right? So as long as my process works, I don't care. You know, I have a Discord page where people talk, and they're asking me all the time, hey, what do you think of the market? What do you think? And I'll say my opinion, but I also say, look, my opinion is no better than anybody else's opinion, right? So take it with a grain of salt, because I can't predict future any better than anybody else. But hopefully what I can do is have a process that puts risk reward in my favor, right? That's really all it is. And that's really what trading is. Getting into situations where risk reward is in your favor time and time and time again, right? And they don't always work. So take your loss, stop out, take your loss, and let the risk reward over time work for you, right? Like flipping a coin, right? If you and I sit here and bet on a flip of a coin, we can be pretty sure over 1,000 flips, it's going to be pretty close to 50-50, right? And if we have to pay a vig in the meantime, we're just going to end up both losing money, right? I pay you $1 when it's heads, you pay me $1 when it's tails, and we got to give 10 cents to the flipper every time. We're both going to end up with zero in the end, right? But clearly, if I could pay you $1 every time it's heads, and you pay me $3 every time it's tails, that's the kind of situation I want to get into. You know, I want to flip the coin as many times as possible if we can make that bet, right? And that's what trading is. Getting into these situations where you're getting paid for to lose one, paid for to lose one, paid for to lose one. It has nothing to do with your ability to predict the future.
So it sounds like, in addition to controlling your ego, a big part of it would also be discipline.
Which, yeah, comes down to ego as well, right? But yes, a huge part of it is discipline. Process, discipline, risk management. You know, I've gone through in the last few months, you know, I preach these things all the time to the people on my Discord and all that. And in the last 3 months, I've had 2 trades in 3 months, which is unusual for me. You know, it's not like I make thousands of trades, but I'll usually get 2, 3, 4, 5 trades a month or something. I've had 2 trades in 3 months. It has been a massive test of my discipline, right? Because you wake up in the morning, I mean, people are paying me to manage their money, and it looks like I'm doing nothing. Now, fortunately, I've made money in that time period, so no one's going to argue with it, but it's a very hard discipline to do, to sit here for 3 months and make 2 trades in 3 months. I mean, I sit in front of the screens all day, I'm watching the markets all day, and I'm not doing anything. You know, it's a very hard, the markets are moving every day, right? There's a long and a short in every single market every day, possibly, right? But I have to stick to my discipline, and then that's what it is. The fact that it's not giving me a lot of trades right now, well, it is what it is. It's been a massive test for me the last few months, because it's rare that I get so few trades like that.
And as a professional trader, I'm sure you have taken many losses and large losses over your career, but when that's happened, how do you, I guess, rebuild it? How do you get back on side? Because, you know, if you take a big loss, that can really take a blow to your confidence.
Yeah, I mean, I don't really take big losses anymore because my stops are pretty tight and I honor all my stops. But certainly in the days when I did do that, that is what helped me learn. You know, I would go back through my stuff and look what I did and look what I've been doing, and why, you know, how am I going to get risk reward better in my side, and all that. So I think the key thing is use those times to get better, right? And develop, if you have process and you believe in your process and your process is working, that doesn't mean it's not going to have losing trades. It's clearly going to. I have more losing trades than winning trades, right? But my payoff on my winners is so much bigger than my losses. So I have been doing this process for over 20 years. So I believe in it. I know that it works. I know what the expectations are, right? And I monitor that. And if it starts falling outside of expectations, well, then I got a problem and I got to start thinking about what's changed and what's not working and do I have to make a change, right? But other than that, I believe in it. It's provided what I wanted to provide. So I just keep following the process. And what I always tell people is what I find when you have a big loss, one way to deal with it is call your mommy because she loves you no matter what. So.
Oh, that's good. So you mentioned you have more losing trades than profitable trades. What would be the percent?
38%. I have a 20-year, about 23 years now of running the same process. So, and this is not back tested, this is actual numbers. It's 38% of my trades make money, and which leaves me 62% of my trades lose money. But the payout is about 4 to 1.
So when I hear you talk about your process and picking the winners and letting them ride, it kind of reminds me, if I want to use an analogy, of like surfing. How a surfer is waiting for that one big wave, right? And you see it coming, and then you just paddle, paddle, paddle. You jump on it and just let it ride.
And sometimes you fall off of it, right? And when you do, you just gotta get back on the board, paddle back out, and wait for the next nice wave, right? Be patient for the next nice wave. Yeah, I think that's exactly right.
And I'm curious, when you were starting out your career, and maybe even now, but do you have mentors? Are there certain traders that you really admire and you follow?
Yeah, so a lot of what I learned came from, quite frankly, I read a lot of trading books, like a lot of people do. Um, the first couple Market Wizards books were extremely helpful to me. The first Market Wizards book in particular, talking about to Kovner and Paul Tudor Jones and Michael Marcus, those type of people. All the things that I'm talking about here are all things that are right there that they talk about, right? I didn't make any of this stuff up, right? I didn't discover any of this stuff, right? A lot of this stuff comes from them. I like to think of my process as kind of almost my conclusion to the first Market Wizards book. All the things that those people talked about is really what slowly went into developing my process.
Yeah, so I read both of those books many times, and they are incredible resources. So, Jason, as we wrap up, if someone would like to follow you and learn more about you and your services, where can they go?
So we have a web page called crowdedmarketreport.com, which was started a couple years ago. I was in the latest Market Wizards book, and when that happened, a lot of people started to contact me, which was very strange for me because I've always kind of been a under the radar type of person. But asking me if I could help them learn how to trade, if I could do it, and I was getting like hundreds of these requests. And one of the people that I said, look, I'd love to help you, but I can't help 200 people at the same time. I have a job, I have a family. And he said, well, why don't I start a web page and centralize this, and we can do that. So that's what we did. He started this web page. My idea was we could just do the thing that I write every week for myself. We could distribute that as a newsletter. So we started to do that. And then he started a Discord page with it, which I didn't know what a Discord page was, being 50 whatever years old. But he started that, and it became really kind of cool from there because we have a lot, and it started, just 20, 30 people, and now we have hundreds. And it's super cool because we have people from all over the world doing all kinds of trading, things that I don't do, day traders, crypto traders, options traders, all things that I don't do. But they are on there doing that, and they're talking to each other, and it's become a lot less about necessarily me. I'm there to help people, just based on my experience of trading and the losses that I've had in the game and learning from that. I'm trying to help them learn the lessons that I have learned, and hopefully they can adapt that to their trading to make their trading better. But I learn a lot from these people as well, because we have people from all over the world and all different kinds of trading styles that are doing all different kinds of things, and it's become kind of a super cool community.
So they can find you on Discord. Where do they go exactly?
They have to go to crowdedmarketreport.com
Okay.
to join that. I also am on Twitter, and I do videos every weekend on YouTube on the Crowded Market Report also, which, that's all free. So, and mostly what I'm talking about on there are other things that we're talking about. I'm not on there saying SPUs are going up this week, buy them, right? I will occasionally, when there's something super crazy out there in my eyes, I will occasionally address that market-wise on some of those videos. But I'm really trying to address it more in the way of thought process and psychology, right? I'll be like, look, I know you're all thinking this, right? Because I hear it every day from everywhere. And this is why I think maybe what you're thinking is wrong, based on my experience, based on my view of how markets work. This is why maybe you might want to rethink that. And sometimes I'm wrong, but it's more of trying to get thought process in people's minds, right? Stop thinking that you're going to predict the market over time and make money. Start thinking more about discipline, risk reward, and those type of things.
Great insights, Jason. And I want to thank you very much for spending time with us today. And I look forward to our next discussion.
Great. Thanks for having me.